So we're going to do a deep dive into my $1.5 million investment portfolio. I'm going to show you all the stocks that I have, all the options trades that I have out there, and there's a couple sleepers in my portfolio that maybe you could take a look at because I think they're going to moon. So we're going to start in this portfolio first. This is the main one that I show you guys. So current value right now is $802,000. You can see that my 2-year return is $518,000, which I'm up 182%. You see, the problem with most people with investing is they don't know where to start, they don't know what trades to make, and there's so much noise in the market that they don't know who to listen to, what's truth, what's false. Do I time the market? Do I go all into the market? Do I do put options? Do I do call options? Everything seems super complicated. So that's the point of this video. I'm going to show you everything that I do because I like to keep things simple. And my simple strategy in 2023, I made a return of 75%. So that 75% is straight up profit that I made on the money that I had in there. I did not add money to the Charles Schwab account. You can see right here, net contributions this period, I did a net withdrawal of $24,000 in my portfolio. So the money that I made right here is true profit. So I started with $290,000, I made $240,000, and now it's at $506,000. And then if we look at this chart on the right hand side, you can see that my account made 75%, the NASDAQ went up 43%, and the S&P 500 went up 26%. So the market had a really good year last year, but I totally crushed what the market did. Now, I'm not saying that every year is going to be this good. We will probably even have some down years. That's totally acceptable. I have a long-term investment horizon, so if we do have down years, that's okay. But just to show you how my strategy works, I made 75%, the market made 43%, and everyone that was sitting on the sideline saying that a crash is coming, they made 0%. So they're the real losers in this scenario. I made $240,000 and they made nothing. So I just want to hit on this chart real quick, and then I'm going to open up my portfolio and show you all the trades that I have open and a couple big trades that I think are still going to make a lot of money. So if we go back to September of 2022, portfolio had about $280,000 in it. Right now, all the way to the right, you can see right here, we're up about $802,000. So in my portfolio, you guys know I have a lot of money of Triple Q and VOO. So when the stock market took that dip at the end of July, I went from $803,000 all the way down to $660,000. Now, a lot of you guys are going to be like, holy crap, you lost $140,000 on paper. Like, well, how are you not panicking? How was I not panicking? Because I do my own research. I've read hundreds of investment books. I've done many classes. I went to many seminars. And when you get more information in your head, you become more confident in what you're trading in. So the whole point of that dip was a Japan carry trade, and we were going to go into a recession. I was confident that none of that was going to happen, and I was actually in Vegas that weekend when that was happening, and I was looking around and Vegas was absolutely packed. I couldn't even get a dinner reservation. I know that's one little sample of the economy, but I wasn't buying that we were going to go into a full-blown recession. So when that dip happened, I bought the crap out of that dip. So we went from $659,000 all the way up to $802,000. Now, what you need to understand with this dip is before the dip happened, Triple Q was $502 a share. Right now, it's $476 a share. But you gotta understand, from peak to peak, 803,000 to 802, I'm pretty much even right now. I am even right now in my portfolio, but Triple Q is $476, and the all-time high was $502. So that juice that goes from $476 back to the all-time high, that's pure profit in my portfolio. So this will probably be around $850,000. So I'll probably make, $50,000 to maybe $75,000 off of this dip right here. So that is the importance of having confidence in your trades, because you guys got to understand, anytime that the market goes down, there's going to be so much FUD, fear, uncertainty, doubt, news articles that come out from CNBC and Yahoo Finance, where it was wrote by some dude that probably has $500 to his name and doesn't even know what investing is. So you're going to read that article, they're going to have some compelling story of why the market's going to go down, you're going to panic, and you're going to sell at the bottom. Smart investors don't do that. Smart investors have conviction in their trades, and when there's something that they like, such as Triple Q that was at $500 a share 2 weeks prior to that, and now it's at $440 a share, we see that as a huge buying opportunity. So now we're going to dive into my portfolio. I'm going to show you everything I have open, all the options trades, all the margin requirements. A lot of you guys are asking about that. All the risks to my portfolio, because I could lose money on some stuff, and some of the stuff that I have my eyes on where I can make a lot of money on. So coming across the top, I have Triple Q, 912 shares. I'm up about $120,000 on them. Always make sure you reinvest your dividends, by the way. I don't like dividends, but if I have to get them, I will reinvest them, of course. Dividend yield's 0.64%. It's really nothing. Margin requirement, don't worry about this right here. We're going to get into the margin requirement once we go into the puts that I sell. So when you own the shares straight up, don't really worry about that. So VOO, I have 441 shares. It's about $228,000. I'm up 60,000 on that. And yes, of course, reinvest your dividends. The Qs were about 53%, VOs about 28%. And then going down one line, I have 500 shares of Tesla. I'm up about $32,000 on those, and that's about 13% of my portfolio. So I'm really against owning individual companies unless I have a lot of conviction for that company. For example, I have a Tesla, so I test the product every day. So the majority of the Tesla valuation, I think, is going to be built into Full Self-Driving, which is like the Robotaxi network, and into the Optimus robot. I'm in the camp that FSD is probably going to go mainstream maybe in like a year or two, and then the robot's probably like 5 years out from right now. So this is a play that I'm going to sit on for the long run. I will never sell my Tesla shares until I feel like the total realized value for the company is currently priced into the market, which right now FSD is not priced in and Robotaxi is not priced in, so I will sit on those shares for the long run. So going down a little bit, so I sold 10 contracts, that's why it's minus right here on Schwab, 10 contracts, $170 strike price. I sold a put for a 6/20 of 2025 expiration date. The current price of Tesla is $214. So what I want to happen on this trade is I want Tesla to either go up, stay flat, or not go below $170 per share. If that happens, this contract will expire worthless and I will realize the full premium. So I sold this contract for $30,000. I'm currently up $15,000 on it. And the market value, if I want to buy this contract back right now, it would cost me $15,000. So this plus this should always equal your cost basis. Now to go into how much money does this require to do? So in Schwab, to do this trade, I'm required to have $49,000 of margin requirement. So what that means is I have to have $49,000 of value in my account to support this, but I have no cash in my account. I actually have minus $3,000 of cash in my account. I have to fix that. That's just a little rounding error that I did. So I'll fix that tomorrow, but the goal is to have no cash in my account. So if I have to take assignment of these Tesla puts, I'm $170,000 in the hole that I have to come up with in order to accept assignment of these shares. Now you need to ask yourself, are you okay to take assignment of Tesla shares at $170 a share? The answer for me is yes, because if I get assigned Tesla at 170, I will sell covered calls on those shares until I get rid of them. And as long as your covered call premiums, you earn more money from those than what your margin interest is, you're okay. You could just sell covered calls until the share price rises up and you get rid of the shares. So right now I'm required to have $49,000 in my account in cash or cash equivalents, which is the shares, in order to support that trade. Now, if the shares of Tesla fall, this margin requirement will go up because the margin requirement is a function of how likely the contract is to expire in the money. Now, if Tesla shares go up in value, this margin requirement will go down because it's less likely for that contract to expire in the money. It'll more likely expire worthless. So then the margin requirement goes down. Now, a lot of people are going to say, dude, you sold so many puts. Like, what if the market crashes and you have to take assignment on all these shares? Well, let's take a look. So on Tesla right here, I have a little buffer. It's a $44 share buffer. Is that a lot on Tesla? Honestly, not really. But I think by 6/20 of 2025, Tesla's going to be higher than it is right now. And I think that with Robotaxi Day coming up on 10/10, I think that'll be a catalyst for the stock. I expect that maybe the stock will pump going into that and then it'll sell the news, but then it'll start going back up. And once the election is over, I think a lot of uncertainty is going to be taken out of the market. So I think that equities are going to appreciate a little bit. I could be wrong, but that's just what I think. So going down, Triple Q. So most of my Triple Q puts, the strike price is like 350 or below. I have a couple where the strike price is 400 bucks on them. So for example, on this one, Triple Q right now is $476 a share. So the way that I make money on this trade and realize the full premium, Triple Q either could go up, it could stay flat, or it can't go below $400 per share. But take a look right here. My cost per share is $13.87 per share. So that is the premium that I receive for selling the put contract, which is right here, $13,873. I'm up $9,000 on it. And if I want to buy it back, it's going to cost me $4,000. So I sold it for $13, I could buy it back for $4, and that's where my $9,000 profit comes from. Don't worry about this weird number. This is actually a $400 strike. Triple Q did a special dividend. That's why all these strike prices are kind of weird on Triple Q. But this was $400, and if it's $399.78, it's technically better than $400 for me, so I'll take it. So if I get assigned the shares at a $400 strike price, but the current price is $399, I'm technically down $1,000 right now because it's $1 share times 1,000 shares because it's 10 contracts that I sold. So I'm down $1,000. But you got to remember, I received $13,800 in premium. So if you subtract the two, I'm still going to be up $12,800 on that trade. Now, with regards to margin requirement on this trade, I'm required to have $44,000 of equity in the account And like I said, my equity in my account is from having shares of VOO and Triple Q and Tesla. Now, if the market absolutely tanks, one of two things will happen. I will either take assignment of the shares and I'll probably get a margin call, where that means I'll have to send more money to Schwab in order to support the assignment, or I would close out the contract before expiration date and I'll just realize the loss on paper. But you gotta understand, the bet that I am making, and this is the worst case scenario one, most of my strikes are like 350 and lower. Remember, $400 is my strike. If it falls $400 minus $13, so $387 is technically my break even on this trade. Is it gonna fall from 476 to 387? Possibly, but not likely. And for this trade right here, that has to happen by 117 of 2025. So I like where I'm at on that trade right there. And then, I mean, we don't have to go through every single trade that I have open right now. We could go through the Apple one if you want. You know, the right hand side shows how much money I have to have in my account to support all these trades. But, you know, I'm not going to say that I'm up on every trade. I'm going to scroll down and show you some trades that I'm actually down a lot on. So I sold some puts on Apple, more puts I sold on the Qs. So IWM right here, you could see I sold 10 contracts at a 215 strike, and I bought the 220 call. I'm in the camp that IWM is going to go up. I think the small caps are going to go up because interest rates are going to fall. That's good for small caps. So Nvidia, we bought calls on that one on the dip. I messed this trade up too a little bit. I was supposed to have a limit order on it, but it went to a market order. And the issue was there was high volatility in the market and the bid-ask spreads were super wide. So when I accidentally did a market order instead of a limit order, it got filled at the high side of the price and there was such high volatility that it really went bad on me. So I think if I did the limit order and it would have actually went through, I would have been pretty much flat on this trade. I mean, I really got screwed on that one, but that was my fault. TMF, you know my sentiment on TMF. I think the rates are going to fall, and if rates fall, bond prices will go up. This is a triple leverage on the price of bonds. So if bond prices go up, this is for like the 30-year bond. If bond prices go up, this will go up too. And then down here on the bottom, the big one that I'm down a lot on, but I actually want to be down on this one. So I'm down $14,000 on these SQQQ calls. This is a hedge against the market. So SQQQ is short triple Q. So I have a pretty big real estate deal out there that I'm working on right now. And this is downside protection just in case the market does fall. I don't think the market's going to have a drastic fall, but this is just a hedge. So I'm okay to be down $14,000 on this, because if I'm down 14K on this, that means most of these are going to go up, so that's totally fine with me. And it's just a small percent of my portfolio. It's less than 1%. The plan is I'm going to let this ride out pretty much until expiration, and then I'm just going to sell the contract right before the expiration date. I'll realize probably like a $20,000 loss on paper on that one, and that's fine. That'll help out my taxes a lot for this year, because I have almost $200,000 of capital gains that I realized this year. So $200,000 of capital gains and I realized a $14,000 loss. I'm totally fine with that. That is okay with me. So I know this was kind of a longer video, but a lot of you guys have been requesting this. I put a couple really good links in the description for how I went from 0 to $1.5 million, how I trade stock options, my full tutorial video, and my Discord link. Lots of really good info on my Discord. Also on my X, check that link out too. Like, subscribe, and I'll see you guys later.